Okay. Check, check, check.
It's like a live podcast here, Dan.
True story. Okay, well, Taylor, thank you so much for framing this up. Thank you, everybody here, for being here today, and Integrated Equities, of course, for putting on this great event. Taylor did a great job framing up what we're going to be talking about today, so I suggest we just get right into it. Right out of the gate here, just a little bit about us. Myself and Ryan Dash, as mentioned, we are the Vancouver Life Real Estate Group here in Vancouver. Been agents for about 6 years with over $250 million collectively sold. We created our group, and we also create and have a Vancouver Life podcast and YouTube channel. As we all know, the Vancouver real estate market moves incredibly fast, and so we release new videos every single week to keep our viewers up to date on the market and where the opportunities lie. And then lastly, real quick here, we also have created a Vancouver Real Estate Investors Facebook group, which just crossed the 7,800 members mark. It's a great little community place for us to go and share opportunities and just help the community as a whole answer questions and share resources. So if you're not a member, please, you can check that out as well.
All right, guys, so let's talk about what we're going to talk about. We'll have a 20-minute chat. We are going to cover the recent history of the Vancouver real estate market, the 2023 real estate forecast, what we feel are going to be very interesting things to invest in the next 12 months, pocket listing opportunities, along with some Q&A followed at the end.
Yeah, so let's do a quick look back to frame up where we think we're going to be going next. And we're going to go back to basically January of 2020, just pre-pandemic and then all the way up to today. So as we likely all know, a ton of free money flooded the marketplace, and along with record low interest rates, created one of the most incredible buying sprees or insane buying sprees we've ever seen. From January 2020 all the way up to April of 2022, Greater Vancouver real estate properties increased an average of 38%, almost $350,000 on average. Those years, 2020 and 2021, also saw the first and second highest sales volumes in recorded history. Because of this, of course, inflation started to trend upwards, and it actually started ticking upwards all the way back in May of 2020. It took until April of 2021 before it broke through the target 3% rate. What's pretty wild to know looking back now is inflation hit 6.7% in March of 2022, and that was the first time they started raising rates. So we were at 6.7% before they started increasing rates, and then as we know, all the way up until last month, we saw a whopping 425 basis point increase, basically the fastest increase we've seen in over 3 decades. This put a bit of a shock into the marketplace, right? Buyers were suddenly thinking, oh my goodness, my buying power has decreased a lot. Sellers are like, oh my God, I can't sell my house for what I could 6 months ago. And it essentially pushed both parties to the sidelines. And then we've seen sales volumes drop off, and also prices, of course, because when you have your buying power reduced by 30-odd%, you can't afford what you could previously. From the peak, which happened back in April, May of last year, prices have come down a total of about 14%. So $153,000 on average, putting us back to around the prices that they were in September of 2021.
So this graph here illustrates that whole story. Back in 2020, here we had an average price point of $925,000. And then the pandemic hit, and then rates dropped, and things exploded. As you can see here, as we went through 2021, an extremely robust marketplace. People were flooding the marketplace with a lot of, like Dan said, a lot of free money. And by sort of February 2022, early March, we saw the blow off top, and as a result of these interest rate hikes now coming in at the fastest record we've seen, we've deflated now by another 14%. Sorry. And that kind of tells the story here of the Vancouver real estate in the last couple of years.
So clearly it's been essentially a roller coaster ride, and to be honest, it's quite unhealthy, right, for both buyers and sellers to have this dramatic of a market. So that's the history, and so now we kind of want to look at what we've been talking to our clients about where we think things are going to go in the next 12 months, right? We always get that question. When is the right time to buy, sell, and where are the opportunities for investors? So we look to the economic indicators and factors that are going to dictate where real estate prices and opportunities lie in the next, like I said, year or so. So we're going to touch obviously on interest rates, where insolvencies are sitting, the immigration and population growth we've seen and what's forecasted, where employment is sitting and likely to go, the inventory crisis that we've been experiencing for some time, and how construction of new homes is going to affect inventory.
Yeah, so when you get to the next slide here, when we touch on interest rates, it's definitely been a story, and it continues to evolve almost every month here. 3 weeks ago, the markets were pricing in 2 rate cuts. And then we got a jobs report that said we had 15,000 people that we were expected to put to work, and we put 150,000 people to work. It's quite an oversight. As such, now we're looking like we might see one more rate hike before the summer. The thing is when you hire that many people, and you put that much money back into the system, inflation becomes a whole lot stickier than it was at the start. The next thing to look at here is the 5-year Canadian government bond. Bonds are a great way to see where mortgage rates are going. And as we were 2 weeks ago, we were plus 5%. Now we're headed back to 4%. It's all over the place right now. So if you want to know where mortgage rates are going to go, keep your eye on this Canadian 5-year government bond. It's one of the best indicators we have.
So clearly a volatile market. I mean, to go have a 75 basis point predictions like shift within only 3 weeks makes things very hard to predict in the best of times, and we are essentially more volatile than ever. So when we look to Bank of Canada and how they're going to make their decisions moving forward, they're essentially being pulled in 2 polarizing ways right now. So in the top right here, you've got your Canadian household debt, which they're very aware of, and interest costs as a percent of disposable income, for example, is essentially skyrocketing, right? We're well above the global financial crisis back in 2008, 2009. And then you've got inflation on the other side, pulling them in a different manner, making them want to potentially do those increases. Just this week, we had the US print come out, and it only dropped 0.1%. Inflation is proving to be sticky again. And because we're so tied to what happens in the States, very good chance that when Canada's print comes out next week, it may resemble a similar decrease of in and around maybe only 0.1%. Regardless, if we take a snapshot of where we are today, it looks, and again, based largely on what Tiff is saying, we should be sticking in and around the overnight rate of about 4.5% for the duration of the year. Ask me again next week, I might say something different, but that's where we sit today.
Yeah.
Go.
There we go. With all of that said, though, Canadians are very good savers. And that's one thing here that has helped to cushion this blow. As you can see here, mortgage delinquencies are still at record low rates. This is a bit of a lagging indicator, guys. Okay, so this is about 6 months behind, but generally speaking, as of September, a record low of only 0.14% of mortgages across the nation are in delinquencies. And furthermore, in BC and Ontario, that number goes down even further to just 0.1. So that tells you that Canadians, no matter what, are trying to pay their mortgages. It's a stretch, but that's what they're paying first. What it also tells us, and I think when we started to see the landscape change, a lot of buyers, one, they stepped back because of interest rates, but the other reason is they thought prices were going to really drop, and as a result of that, they were going to get a great deal. That doesn't appear to be happening, because Canadians, again, over those 2 years, if they got CERB money or their businesses got a cash injection, they saved that money. And that is a result of record low delinquencies.
So anyone expecting there to be a flood of foreclosures coming, the data says otherwise, right? And keep in mind, this is just delinquencies. And so if this were to suddenly spike, you're still looking at a minimum of 9 to 12 months out before any type of volume of foreclosures would ever hit the market. Yeah. So those are not coming in 2023. So let's look at other types of debt here. So we've got consumer insolvencies and we've got credit card delinquencies. Understandably, and there's no question here, the data shows both of those are ticking upwards, and a high interest rate environment, at least comparatively to the last few years here, it's going to continue to trend upwards. But the main takeaway I want you to have from these charts is we're still sitting 30-40% below where we were pre-pandemic levels. So in essence, while people are feeling a little bit stretched, they are quite solvent, and more so than they were dating back to 2020. Again, keeping them pretty robust within the economy and being able to keep a roof over their heads.
All right, population growth, because this is a story in and of itself. I mean, guys, look at 2022. I know the government of Canada says we're bringing in 465,000 people next year, or this year, but last year we did 850,000. That's the real number. 460-odd thousand of them were permanent residents for sure, but you had 200,000 international students, you had visa applications, and you just had population growth that existed here. So generally speaking, this is an order of magnitude that we haven't seen in decades. And while some of these people may be immigrants and they are now not allowed to buy for 2 years as the foreign buyer ban is implemented, they are going to rent and they're going to find places after those 2 years, and that is going to lengthen our supply of buyers. And as we look over here in Vancouver too, Vancouver has seen a massive growth. Nearly 80,000 people is what our population grew by in 2022. So a huge number. Again, a lot of these buyers are still waiting to see how things play out, but know that they are on the sideline and they are waiting to come into the market.
Yeah, there's a few predictions now saying that we will likely cross the 1 million mark for population growth in Canada in 2023. So how is all those factors affecting inventory here? Well, this is a chart that demonstrates that quite well. So this is about a 20-year graph of inventory across GVRD. And that little red circle in your bottom right-hand corner there is where we sit today. And you can tell obviously by this red line here, the trend is going downwards for at least 3 years in a row here. What we're going through right now, there's a lot of people that reference the global financial crisis, right? But things are much worse. Rates are higher, things are tougher, homes are way more expensive, et cetera, et cetera. But the one dramatic change here when it comes to inventory and the climate we're in is we're sitting here about 8,200 active listings today. You go back to the GFC and it's that highest spike there on the left, there was over 20,000 homes available for sale. There's almost 1/3 that amount today. So that sets us up for a very different outcome on the other side of inflation.
This is a fascinating graph. So just last week, Stats Canada released a consensus report where it looked at all the households across Canada, but primarily the major marketplaces. And when you look at Vancouver here, 50% of homeowners do not have a mortgage in Vancouver, which is an incredible stat. And even more interestingly, as you look at the west side of Vancouver, the vast majority, more than 50%, do not have a mortgage. And you go to the east side, you look at like Grandview Woodlands, for example, you're looking at roughly 61% of families that have a mortgage. So you're seeing this movement, this migration from west to east for new families. That's one part of that. The other part of this that I want to illustrate is that people are not going to panic sell, because if 50% of the market, 50% of the supply is not affected by interest rates, then they're not going to wait, or sorry, they are going to wait for the perfect time to sell their home, right? So a lot of the inventory that buyers were hoping for, a lot of the narrative that they had been telling themselves about this flood of inventory, we're going to pick it up because interest rates are going to drive it down. Without supply, we have nothing.
Yeah, and what this chart does not show is that the existing mortgage amounts, essentially, right? So if you have $1,000 on your mortgage, you're showing up in the blue here. And it's not like everybody else who's in the blue is sitting at 80 to 90% loan to value. So very robust and very kind of sound climate that we have with homeowners. So let's talk a little bit about this potential future supply crisis and construction, essentially. We know in Greater Vancouver, detached homes are kind of going the way of the dinosaur, in the sense that they are very rare, they're not really being built, and of course, because of densification, they're being torn down to put up duplexes, triplexes, and so forth. This chart is another example of what's happening, where in just the last 3 months, we're seeing the single family home housing starts drop by 25%. So given our population growth and given how financially sound most of Canada is, this is also going to help set the stage for a supply crisis down the road.
I don't know if you tried to buy a house in the last 2 years, but you know what that looks like. This here, guys, is a very interesting graph too. It shows you really the intent of the city. Densification is the plan here. Condos are what are under construction the most. It's how we're going to house most of the population. When you look at the rental side of things, you can see a huge spike in the rental, and that is because of affordability and supply. And then you look at single family. In single family, the city is appropriating roughly 5% of all new construction for single family. That's it. because they know it's unaffordable and they cannot address the affordability without creating density. And that leads us to the Plex plan, which we'll get into in a little bit here.
You're electric today. So a bit more of today's landscape and where we are today and what's going to affect the investment market moving forward into the immediate future. Vacancy rates now at 0.9%. It's getting even tighter. I mean, we're down from 1.2% just 2 years ago. Any landlords in the room will likely know that rental rates have been skyrocketing in the last couple of years here. One-bedroom homes in GVRD have just crossed an average of $2,700 per month. And yes, that's long-term unfurnished. Inventory remains extremely tight going forward here. And like I said, mortgage rates look to remain largely stable for the rest of the year, again, based on today's data. And as we know, the single-family home, they're basically disappearing, and the construction is also emulating that. So as you can kind of tell where we're focusing here, single-family homes are becoming quite the commodity because scarcity equals opportunity and value. Yeah.
So the city knows this too. And the city has just gone about tabling one of, I think, the most progressive things that they've done since probably adding in laneways. And what you're seeing here is a map of Vancouver West and Vancouver East. And what the proposal is they're going to blanket rezone both the west side and the east side under the Plex plan. And this will allow homeowners, anything that's zoned RS. You can see here with the standard lots, they're yellow, right? The blue lots or the turquoise lots, they're your typically larger lots, and you find them mostly on the west side. And you can see here that the single family lots could see up to 4 units per lot, while larger lots could see up to 6 units per lot. This is a proposal, and it's going through its public consultation phase this month, and I think throughout the year you're going to hear more and more updates. Again, I would like to think that this creates more utility. However, I don't know if people on the west side of Vancouver are going to be okay with this. Definitely people on the east side are screaming for it. So it'll be a very interesting proposal to see what happens and how this flows.
Yeah, within the proposal, when it comes to actual density, they're looking at somewhere around a 1.0 FAR or floor area ratio. So if you take your typical 33 by 120 lot, you're looking at in and around 4,000 square feet that's now buildable on that lot. So if you take that 4,000 square feet, turn it into a fourplex, you've now got around 4 times 1,000 square foot units valued at around $1.1 million today.
Yeah, and just for some reference, right now the current zoning is, I think it's about 0.86, so we can't quite use the whole lot, but under this plan, you're essentially going to be able to build the home, the whole square footage of the home, as the same square footage as the actual lot. And this creates a bit of an affordability case versus an investment case. So if you own a single family home, should you just sell it as a single family home? Or should you be talking to your neighbors about maybe assembling and creating a much bigger space, which will allow for, before we could have maybe on 2 or 3 lots, you could have up to 6 duplexes, 6 units, 3 duplexes. Now we're talking about doubling or even tripling that in terms of density. And you can see here, so if, a new single family home in the east side of Vancouver here, probably somewhere 2.5 to 2.8. A new duplex value, right, 1.65 per side. Then you're looking at a triplex value of 1.35 per side, a total of 4 million, and as Dan mentioned, about 1.1 million per side on a fourplex, creating value of about 4.4 million.
So you can see where we are pushing or talking to our clients rather about where we see some opportunities within Vancouver, especially if this proposal moves forward, which is slated for somewhere in and around January of next year. So we do have a couple of opportunities today that we want to just quickly slide in here as well, because they do fall in line with potential opportunity in the immediate future.
Yeah, we've got a couple assemblies here, and guys, if you have questions specifically about these, please bring them up after the fact. But generally, we've got in East Vancouver 4 lots here, totaling just over 10,000 square feet. And it's a prime location for the Plex plan. A lot of East Vancouver right now is seeing townhome construction and multiplex conversion. So expect to see a lot more of that in the near future. And I also think you're going to see a lot more opportunity when it comes to land assemblies. The city is looking to densify. We've got a new mayor. right? These are things that builders and developers should be aware of. So you can see here is a prime example. You've got the 4 units sitting on this side, and then behind it there, you can see exactly the future, right? So you've got these homes here were built in 1908 to 1911, and they all kind of sit a little funky. And when you look next door, you've got townhomes, and then across the street here, they're building 22 new condos, and then at the end, it's multiplex. So single family, you can just see single family is disappearing.
Similar scenario in North Vancouver here. Why don't you walk us through this one?
Yeah,
too?
so in North Vancouver, we've also got another opportunity. Again, we've currently got one of the lots with two of the neighboring lots very interested in doing business, allowing for a total of 31,000 square feet of buildable. Currently zoned single family, but you can build townhomes, and that's exactly where we're at now. So if you're looking for an opportunity like this, and you're either looking to partner or you're looking to get invested, please reach us afterwards.
Oh, and if you're looking outside of BC.
Yeah, we've actually got some interesting opportunities outside of BC as well. If you're looking for some development plays, you're looking for some cash flow plays, these are great. Development play here, we've got a modular home park here. It's called the Meadows in Whitecourt, Alberta. We also have 10 fourplexes for sale in Whitecourt, Alberta. It's a fantastic cash flow opportunity. We have about 95% of it filled up. And there's also an industrial play near these 2 locations. So if you're interested in any of those and you want to know more, please reach out to me afterwards.
So thank you so much. I'm certain we went over our 20 minutes, but hopefully we've got some time left for Q&A. And excuse me, Taylor, if you want to let us know what kind of timing we're looking at.